Breaking news. Global markets are bracing for impact as a fresh trade war erupts between the United States and China, with both economic giants taking increasingly aggressive stances. The conflict, which kicked off just over a month ago, has now entered a dangerous new phase as Beijing prepares to counter the Trump administration's latest tariff offensive. The latest escalation targets two critical sectors: American agriculture and high-tech industries. While Chinese officials maintain they prefer a calm solution, they've made it clear that retaliation is inevitable if their interests are threatened. This comes after the Trump administration's implementation of a 10% tariff on Chinese goods, followed by an additional 10% increase, coinciding with 25% tariffs on Canada and Mexico. The White House has taken a hardline stance, threatening to raise tariffs up to 60% if China retaliates. This aggressive posturing, combined with Canada's countermeasures, suggests Washington could be fighting an economic battle on multiple fronts. Chinese Minister of Commerce Wang Wenta's recent press conference in Beijing sent shockwaves through global markets. "We will not yield to these tariff impositions," Wang stated, "but will swiftly launch our countermeasures." Beijing's arsenal includes potentially shifting aviation orders from Boeing to Airbus and restricting semiconductor exports, moves that could severely disrupt global supply chains. What's particularly concerning for American businesses is China's targeted approach to retaliation. Beijing has already imposed broad tariffs on U.S. food imports and has identified 15 American companies for potential restrictions. The focus on agricultural imports appears strategically designed to pressure key U.S. economic sectors. Market analysts are drawing parallels to the Great Trade War of 2019, warning that current tensions could have even more severe implications for global commerce. With neither side showing signs of backing down, the international business community watches nervously as these economic giants square off in what could become a prolonged and damaging conflict. In a significant escalation of trade tensions between the world's largest economies, China has announced sweeping retaliatory measures against American businesses and products. The Chinese Ministry of Commerce has imposed substantial tariffs on key American exports and restricted U.S. companies from operating within its borders. Starting March 10th, China will implement a 15% tariff on American agricultural products, including chicken, wheat, corn, and cotton. Additional 10% tariffs will affect food products, from soybeans to dairy items. This move impacts approximately $21 billion in U.S. exports to China, representing 15% of total American exports to the Asian giant. Beijing has targeted 15 U.S. companies, including Skyo, America's premier drone manufacturer and crucial supplier to U.S. military and emergency services. These companies will require special authorization to purchase Chinese products, creating a significant barrier to operations. The Chinese response follows February's U.S. tariff implementation. Though Beijing's initial reaction targeted American exports of liquefied natural gas, coal, and agricultural machinery. This new round of restrictions represents a more aggressive stance, employing supply chain warfare. The timing is notable, as China faces challenges in attracting foreign investment while dealing with a troubled real estate sector. Lu Qinian, speaking for China's National People's Congress, criticized the United States for violating World Trade Organization free trade principles. China's Commerce Ministry has blacklisted 10 additional American firms, primarily military contractors, as untrustworthy organizations. This designation prevents them from conducting business within China. Notable among these is Illuminina, a San Diego-based biotech firm accused of discriminatory practices. These developments signal a deepening trade conflict, with both nations showing little inclination toward compromise. The impact on global supply chains and international trade relations continues to grow, raising concerns about economic consequences. In a dramatic escalation of tensions between global superpowers, President Donald Trump has directly linked new tariff policies to China's fentanyl exports, marking a potentially explosive new chapter in the ongoing trade dispute. During a March 3, 2025 press conference, Trump demanded Beijing halt fentanyl shipments before any trade negotiations could proceed. The synthetic opioid crisis has become a central battlefield in this economic confrontation. China's response targets Trump's political heartland, American farmers. "Farmers are Trump's core voter base," declared a Chinese official. "We are determined to send them a message with these taxes." Beijing's strategy involves increasing tariffs on crucial agricultural products, including soybeans, corn, and meat products, specifically aimed at Midwestern states. The stakes are high for American soybean farmers, who exported nearly $22 billion worth of products to China in 2024. These new tariffs, dubbed Trump 2.0 by media outlets, threaten to devastate this market and potentially bankrupt many operations. China's retaliation extends beyond agriculture. Beijing plans to target America's high-tech sectors, particularly semiconductor production, by restricting technology imports and limiting exports of rare earth elements, crucial for electronics manufacturing. The conflict's scope has expanded, with China warning against American economic aggression. A Beijing official stated, "It is a big mistake for the United States to think that it can fight with the whole world and win. We are tough too. We will see together." This renewed trade war threatens to disrupt global supply chains and economic stability, when international markets are already facing challenges. With both superpowers showing little sign of backing down, economists warn of potential ripple effects throughout the global economy, affecting consumer prices and international trade relationships. The situation continues to develop as both nations maintain their positions, with neither showing signs of compromise. These escalating tensions are potentially reshaping global economic alignments and supply chain structures. Trade war intensifies. China and Canada mount unified response to U.S. tariffs. In a significant escalation of global trade tensions, Beijing is expanding its retaliatory measures against U.S. tariffs beyond agricultural products, targeting the automotive and aerospace sectors. Industry analysts reveal that China's strategic pivot could severely impact Boeing, which sells approximately 150 aircraft annually to Chinese buyers. The potential shift of Chinese purchases to European manufacturer Airbus by the end of 2024 could result in billions in losses for the American aerospace industry. Beijing's previous hints about diversifying aircraft suppliers are now materializing into concrete threats, causing concern within the Trump administration. The situation intensifies as Canada joins in, threatening to restrict energy and electricity exports to the United States. This two-pronged pressure creates a challenging scenario for American economic interests. China's strategy targets both U.S. farmers and technology giants, while other Asian nations prepare retaliatory measures against American tariffs. During a Washington press conference on March 3, 2025, President Trump maintained a hard line stating, "Let those who do not like our tariffs trade fairly with us, or they will pay the price." He emphasized U.S. willingness to engage in dialogue while refusing concessions. Economic experts warn that Washington's simultaneous tariff conflicts could trigger domestic inflation and disrupt global supply chains. A Chinese state media editorial responded defiantly, suggesting Beijing is prepared to implement comprehensive measures against American agricultural products and high-tech industries. The escalating situation has raised concerns among international trade observers, who note that fighting a multi-front trade war could strain U.S. economic resilience. As tensions mount, the global market braces for potential disruptions in trade patterns and supply chains. Here's a 1857-character news story based on the input, formatted for audio broadcast. Good evening. I'm bringing you breaking news about escalating tensions in the U.S.-China trade relationship that could affect everything from your smartphone to the food on your table. In what analysts are calling Trump 2.0 tariffs, we're seeing a dangerous game of economic chicken between the world's two largest economies. China has just issued a stark warning that's sending shockwaves through American industries. They're threatening to restrict exports of rare earth elements, critical materials needed for everything from military equipment to the semiconductors in your devices. Beijing's message is crystal clear. The dignity and interests of our nation are non-negotiable. This comes directly from their foreign ministry spokesperson during yesterday's briefing. But here's where it gets interesting. While China's rattling the economic saber, they're simultaneously extending an olive branch for dialogue. The numbers tell a compelling story. In 2024, China purchased a staggering $100 billion worth of American agricultural products. We're talking soybeans, corn, meat, and more. Now imagine that market disappearing overnight. That's exactly what Beijing is threatening if Trump pushes forward with additional tariffs. Remember 2019? History might be repeating itself. Back then, Trump had to roll out billions in farmer bailouts when China hit back. Now, American farmers, especially in the Midwest and South, are watching nervously as their livelihoods hang in the balance. The million-dollar question is, will Trump bend under pressure from the agricultural sector, or will he double down? Sources close to the administration suggest this could become a defining moment for his trade policy. Meanwhile, the fentanyl crisis has added another layer of complexity, with the U.S. now framing Chinese chemical producers as a national security concern. This moves the conflict beyond pure economics into more dangerous territory. Stay tuned as we continue to follow this developing story. Back to you in the studio. In an escalating trade dispute extending into the pharmaceutical sector, tensions between Washington and Beijing have intensified over the fentanyl issue. The U.S. administration maintains that China deserves sanctions for allegedly insufficient chemical export control. Beijing rejected these accusations during a March 4, 2025 press conference, with China's Ministry of Commerce stating, "Such aggressive action by the United States is causing outrage. We are preparing countermeasures." The U.S. administration's response remained firm on fentanyl-related trade policies. China's retaliation targets four crucial American economic sectors. Agricultural products including soybeans, corn, meat, and dairy products top the list. The aviation sector faces pressure, particularly Boeing's operations. Technology is the third target, with potential restrictions on semiconductors and minerals. Energy deals, specifically liquefied natural gas purchases, might become another battleground. Sources indicate Beijing contemplated implementing taxes on U.S. liquefied natural gas imports during a March 3 meeting. While unconfirmed, China appears willing to deploy all economic weapons if pushed. The U.S. claims tariffs are easy to win, while China references their 2019 resistance, promising similar resolve. This economic conflict threatens the global economy. The situation complicates with existing tensions with Canada and Mexico. Congressional voices question this broad confrontational approach, as agricultural and manufacturing sectors face potential backlash from Canadian and Chinese retaliation. These developments coincide with Trump's March 3 press conference, addressing concerns about trade strategy. The situation mirrors historical trade disputes, though the pharmaceutical angle adds a new dimension. Market analysts suggest this could significantly impact global supply chains for years to come. Good evening, viewers. Tonight we're diving deep into what could be the most significant economic showdown of our time. The trade war between America and China is hitting new levels of intensity, and the stakes couldn't be higher. President Trump's declaration, "We have the power, we will end trade imbalances, we will not let anyone eat America," sets the stage for what appears to be a no-holds-barred economic confrontation. Let's break this down for you. We're seeing a complex chess game unfold. On one side, Beijing wields powerful economic weapons, from agricultural export restrictions to potential limits on Boeing purchases. Their ace in the hole? Those crucial semiconductor supplies and rare earth elements that our defense and technology sectors depend on. Can either side really force the other to submission? It's similar to what we saw near Russia last year. When economic pressure meets determination, the outcome isn't always predictable. The numbers tell a compelling story. China's market of 1.4 billion consumers versus America's technological and financial might. Both sides are flexing their economic muscles, but neither seems ready to blink first. What's particularly interesting is how this mirrors historical trade disputes, but with modern twists. The global supply chain interconnection makes this far more complex than past conflicts. Looking ahead, we're tracking several critical factors: agricultural export dynamics, technology supply chains, defense industry implications, global market reactions. This situation will dominate economic headlines for weeks. Just like in poker, it's not just about the cards you hold, but how you play them. We'll be monitoring these developments closely, bringing you detailed analysis in our upcoming reports. Remember, economic strength often translates to global influence, and both nations know this well. Stay tuned for continuous updates on this evolving situation. Your comments on who might back down first, China or the United States, are invaluable to our discussion. Thank you for making us your trusted news source.